Can the Fed effectively reduce demand without breaking the back of the economy?
I think the answer is no, but here's the reason why. When there's a lot of debt, one man's debts are another man's financial assets. And they have to balance both of those things. And so they will not be able to raise interest rates to a high enough level to adequately provide a real return to investors. So if you think about the rise in rates, and we say 3% is an interest rate,
right,
or even 4% in an interest rate, that is not going to be an amount of money that's adequate to compensate for the inflation rate. And we're in a paradigm shift, I think. A paradigm is, something happens for 10 years, an environment for 10 years, and at the end of that 10 years, people believe everything that happened in the prior 10 years, and then they get a surprise.
Right.
And then they start to change. And something like, for example, cash is a safe investment, or bonds are a safe investment after a 40-year bull market and those types of things. That begins to shift as they start to think, am I getting a real return? So there's going to be a supply-demand balance. Most importantly, the Federal Reserve is going to sell, individuals are selling, foreigners are selling, and the U.S. government is selling because it has to fund its deficit. So there's going to be a supply-demand problem. That means that it produces a squeeze because so much money was put out at such cheap rates,
right,
and so much financing was taken that it'll be difficult to achieve that balance. The question is, what's going to get you a real return, right? And so we've shifted it into an environment where assets that do well, almost like in the 70s, are in those types of things. Real assets, real return assets in its various ways are the best investments. Here's the dynamic I think that's a problem. Everybody's long, equities and so on. And everybody wants everything to go up. And the Federal Reserve wants everything to go up. So what they do is they give you money and credit, lots of money and credit, that helps hyping it. And when the more they hype it, the more it becomes somebody else's financial asset they're holding.
Yep.
And so the world is holding all these financial assets and so on. You can't have that. So you're going to have an environment, I think, of negative real returns. And so as you think about how do you diversify your portfolio or even be short those things, everything can't go up all the time. That system won't work that way.
Welcome, Bitcoin friends. It's Bitcoin Mamo. Today we're going to look at the Bitcoin charts, do some TA, look at various time frames, and we'll also take a look at market Cipher. So we're going to start by looking at the US stock market. This is the S&P 500 futures chart. And in previous videos, we were watching this key level here. This is on the weekly time frame. We did have this weekly order block from this red candle in an uptrend. These are areas of supply and demand and can act as resistance and support levels. And we noticed that there was confluence with the VPVR here, the amount of volume traded at certain price levels. And we did have a spike in the same spot here. And just like the order blocks, time was spent here and volume was spent here. So these spikes can also act as support and resistance levels. And so we were expecting at least a dead cat bounce from this area. And we did end up getting quite a strong bounce. We also had this 382 level marked out, taking the fib retracement from the bottom of the stock market crash to the all-time high here. And we pretty much came exactly to that 382 level and got this bounce. So looking at the current price action, the futures chart did open today. And we can see another spike on the VPVR, pretty much at the level we're at the moment. I do have a fib retracement, taking it from this high down to the low. But we can also look at the overall retracement, taking it from the all-time high. We can see that 382 level is pretty much where we're at the moment. So we might get some resistance here. It does line up with the VPVR spike. But I do think we're possibly going a bit higher here before we do get another pullback. Quite similar to what we did here after this correction. We saw a strong green candle here engulfing the previous red candle. We did carry on for a couple more weeks before getting that next pullback. I have added in the other weekly order blocks here, and we do see they do line up with the next biggest spike here on the VPVR, and also with that golden pocket area, looking at the overall retracement. And just looking at this previous bounce here, if we were to move this up to that local low here, We saw on that bounce, we did come up to that golden pocket. That's where we got the resistance, and that's where we continued a leg lower down. So just moving it back to our lowest point here, we see that golden pocket area does line up with a lot of these weekly order blocks and also an area of possible resistance from the VPVR. So I do think we can possibly come all the way up here, possibly test some of these order blocks, but I do think we will continue down after that, and this will just be a dead cat bounce. And again, as long as inflation is still high, I think interest rates will continue to go up, and I think that will continue to affect the stock market. And with this bounce on the US stock market, we have now seen a bounce on Bitcoin. It was delayed compared to the stock market bounce here, but either way, we are starting to see that bounce on Bitcoin. And down to the 2-week time frame for Bitcoin now. This candle still has the rest of the week before we do close it. If we are to continue a dead cat bounce here, I will be looking at this 2-week order block from this red candle in an uptrend to possibly act as resistance. And I'll also be looking at this 382 fib level, which is taken from the top here of this dead cat bounce down to our low. And we can see on the previous dead cat bounce, after dropping from the all-time high, that we also came to that 382 fib level on this bounce, and that's where we got resistance as well as the 2-week order block. We do also have this parallel channel connecting the overall highs and the lows here, and we could possibly come up and test that channel, but I do think we'll get resistance here and carry down for possibly one more leg down into this wedge before breaking this falling wedge pattern, which is a bullish pattern. We have 2 touches on the top, 2 on the bottom. Normally on the 3rd touch on the upside, we break bullish, but I think we have a bit more to go in this bear market before we break this falling wedge. Whether we get a dead cat bounce here, come back down, possibly just form a double bottom pattern here, down at 25k before breaking the wedge, or whether we keep coming down here to make a lower low before coming back up to break that falling wedge. There are those 2 scenarios. And as mentioned in the previous video, I think anything under 30,000 is good to dollar cost average into the market. But taking it from the all-time high here to our current position, it's been about 5 months. And generally we do spend almost a year in the bear market from the peak. You can see in 2018 we spent a year in that bear market, and also in the 2014 bear market we pretty much spent a year here. So I do think it's too early here for us to break this falling wedge. We are going to spend a few more months in this falling wedge pattern. And for me to change my mind, we would have to break this falling wedge pattern and also get above this level on the RSI at around a 46 reading. And we can see in the previous bear markets, we did spend time below that level as we bottomed out in the bear market here, and reclaiming that level did start the next bull run. We see that also in the 2014 bear market. We lost that level. We spent time here bottoming out. Once we reclaimed it, started the next bull run. And down to the weekly time frame now. We've got the same setup with the falling wedge and that 382 level. We've also marked off some of these weekly order blocks in blue here. You see this order block from this green candle in a downtrend. It does also line up with the 2-week order block in yellow here and that 382 level. So there is a lot of confluence here. And I do think if we come up here, we'll get resistance and we'll get pushed back down. Similar to the previous bounce we just talked about with that 2-week order block and the 382 level, we also have that weekly order block. So we do have a similar setup. We do have that 200-week moving average that everyone's watching. Currently it's sitting at around 22,300. We can see it's got a few more weeks to go before this moving average will enter this falling wedge pattern. And I do think we'll at least test this moving average. And if you're looking for possible bear market levels that we might reach, I did go into detail in that in the previous video. But we can see with our new weekly candle open here, we have opened green after 9 consecutive weeks of red candles. But there's plenty of time left in this week, and we'll have to see how this candle closes. But I do think we're due for a dead cat bounce, especially with the stock market having a bounce. And again, I'll be watching these key levels. And I think this would be a good shorting opportunity if we do get up here. And onto the daily chart now. We can see we have had this move to the upside. And we have been quite choppy here in this range. To smooth this data out, we can look at the higher term time frames. So going to the 4-day chart now, we can see how this does smooth out the data here. And what we can see is Bitcoin has pretty much been stuck in this range on the 4-day time frame between 29.8k and 28.9k. And we have opened and closed each of these candles in that range. We see with our current candle, we have moved to the upside, but this candle doesn't close until the 2nd of June. So we'll have to watch this one and see how this candle closes, if it can break this range, or if we do end up getting pushed back down to the same range that we've been stuck in for the last four-day candles. We do also notice, just zooming out, looking at order blocks here, we do have this green candle in a downtrend, and we notice this order block does line up with that 382 level we were talking about. So there is also that confluence. So if we do get a dead cat bounce, again, this could be a possible area of resistance. There is also a CME Bitcoin futures gap here around a 35k, but we'll go into that when we look at the futures chart. Back to the daily time frame now. We were watching this as a descending triangle. Typically these do break bearish. We have seen we have broken to the upside. We have to wait for this daily candle to close. It would need to close above 30k approximately. If we are able to do that, this would have a measured move, taking it from the second touch point here. The first touch point is the highest point after this bounce, and we just measure the second touch point to the top of the triangle, put it at the breakout level, and this would have a measured move up to 32.5k approximately. And we do also have two important order blocks here on the daily time frame, one from this green candle in a downtrend and one from this green candle in a downtrend. And they have been quite important here. We can see all these wicks above this order block. We weren't able to get above it, kept acting as resistance, and we got pushed back down. And currently we are above that order block. So we would need to close above 30.4k to close above that order block. And then we're looking to get above this larger order block. And at the top of that order block is at 31,000. So these are some key levels to start closing candles above to give confidence that this bounce would reach its target here at 32.5k. Now I have added in the other daily order blocks higher up here, and we also see that 382 fib level we spoke about, and this is the weekly order block in yellow, and also we have that 2-week order block in the same range. And we did mention that CME futures gap, and just to quickly show you that gap is this yellow box here, and we see it goes up to 35.2k approximately. There's that 382 level, and 35.2k is pretty much around this area, in line with that weekly order block and in between two of these daily order blocks. So there are a few levels here where we could possibly get resistance. This next order block is between 33.1k and 32k, and we also have this trend line just connecting these highs here. This can be seen as a bit of a bump and run pattern, and typically bump and run patterns do have this big drop. We tend to consolidate, and then if we are able to get above that trend line, use it as support, quite often that is a good indication that we are going to move higher. We could also have a fake out and on the retest come back down, so there's no guarantees. And again, this could also act as resistance on testing this trend line, and that Bitcoin futures gap could get filled during the next bull run. So there are lots of things to watch, but we can take it one level at a time. We do have the target of this measured move. We have this next order block, and I'll just show you where that order block comes from. It comes from all the way back in our initial bull run in 2021. We had quite a strong uptrend, and we got this red candle. Other things to watch out for is the daily EMA ribbon here. We do see it has been coming down after this big drop, and currently we are testing the bottom of that ribbon. Quite often we do get rejected when first touching the bottom of this ribbon. which is at 30.5k. But I do think we can come up a bit more into this ribbon and possibly close that gap as long as the stock market continues its bounce. Looking at the stochastic RSI, we are still above this 80 level, so we are still in this bullish control zone. We have spent a bit of time up here, and we don't usually spend a lot of time here. We can see we did come down eventually here and also here. So that is something to watch out for if we do end up coming below this 80 level. And the other thing I'm watching on the RSI here is looking for possible hidden bearish divergence. Looking at this point here, which was before we had this breakdown. If we do make a higher high on the RSI, but a lower low on the price, that will be hidden bearish divergence. And we could possibly get a pullback resulting from that. Currently, we are below this level. That's another thing to watch. And onto market cipher now. This is on the daily time frame. We did get that green dot back here on the 13th of May. We did get another red dot here, and I did think we were going to push back down a little bit lower, possibly make some bullish divergence on the RSI. But we have had this bounce. We have gotten another green dot. The money flow is still deep in the red. The 2-day also had that major green dot, and we don't have any red dots present yet. The 3-day also had that major green dot, and we've been watching for these major green dots to build up on the 1-day, 2-day, 3-day, all the way up to the weekly, and then finally the 2-week time frame to help us confirm that the bottom of the bear market is in. And we did see that major green dot on the 4-day time frame, and that did just get confirmed. So we are seeing them build up now from the 1-day to the 4-day time frame. And looking at the 5-day time frame, we don't have that green dot yet. We will close this candle at the end of the day, so perhaps that will appear on the next candle. And we will also close the 6-day candle here at the end of the day, so we will close the 5-day and the 6-day candle, and we may even get a green dot on the 6-day time frame here. But again, if they don't appear till the next candle open, we would have to wait for the candle after that to confirm it, which would be around the 6th of June. And onto the weekly time frame, we did open this new weekly candle. We see this blue wave starting to close off, and eventually we'll be looking for that green dot on the weekly time frame. The money flow has dipped into the red here, and just looking back at the 2018 bear market, we did spend a bit of time in this red money flow. We did actually bottom in 2018 when this weekly green dot appeared. This is the major green dot, not these smaller ones. These major ones appear when we do go below this white line and eventually get the green dot. So this could possibly be a signal for the bottom of the bear market, but we do still need to be cautious. If we do look at the 2014 bear market, we did see that major weekly green dot here, and then we did end up getting a bounce from it here, but we got that red dot on the other side. We continued down quite a bit more, and then that second weekly green dot did indicate the bottom was in, and that's why we're looking for that major green dot on the 2-week time frame. This is the 2-week chart. We can see the major green dot indicated the bottom in the 2018 bear market and also the 2015 bear market. And just looking at the blue wave, it does look like it's still got a bit more to go here, and we haven't crossed below this white line yet. The next 2-week candle will open on the 6th of June. And again, we can compare all 3 of those here. This is the 2014 bear market on the left, the 2018 bear market in the middle, our current bear market on the right. And we've just got those major green dots on market cipher here. The top row is the 1-day time frame, the second row the 2-day time frame, then the 3-day, 4-day, 5-day, 6-day, weekly, and finally the 2-week time frame. But just so we can see how it's progressing here, we have those major green dots up to the 4-day time frame, and we started getting those major green dots here in the 2018 bear market up to the 4-day time frame when we were around this area, and that was at this point here. Just zooming in, and we did end up still going a little bit lower. And in the 2014 bear market, just zooming in, we did have 2 occasions where we got down to the 4-day green dot. One occasion was here, the second occasion was in this area, and we did have that one more big drop down. We had that 4-day green dot at around this area. So it is building up slowly, but for me, we do need to see that major green dot go all the way down to the 2-week time frame. And although it won't get the exact bottom, it will give me confidence that the bottom is in. In 2018, we see that 2-week green dot appeared here. The bottom was back here, but it was a good confirmation. And in 2014-15 bear market, we got that green dot here on the 2-week time frame, and the bottom was back here. So it's not going to get it exactly, but it will give us more confidence that the bottom is in, especially since in 2014 we got it up to the weekly here and we still had one more big drop. So I think that's about all. Hope you enjoyed that analysis. It's going to be important to watch this daily close. Firstly, to close above this triangle pattern, and then also above first this order block lower down, and if we can close above this higher order block. And the next thing we watch for is possible hidden bearish divergence here on the RSI, comparing it to this point, and it will be quite hard for us to close above here. So I do think we will get that hidden bearish divergence and a possible pullback. And I do think this bounce will play out a bit more as long as the stock market is going up. And the measured target again is at 32.4K. So that's all for today. Thanks for watching. I'm Bitcoin Mamo. See you next time. Bye.